Hello, my fellow Extraordinary Americans. I'm Cosmos Dar, and this is Extraordinary America. What is Extraordinary America about? You see, American identity is about freedom, the opportunity for a better life, and the pursuit of happiness. Welcome to Extraordinary America. For today's guest, we have Jay Connor. Jay is the president of the Private Money Authority. He began his investing in real estate in 2003, and at the start of his career, he relied on his local banker and was able to put together a few deals. However, that also meant coming up with large down payments, paying origination fees, and signing personal guarantees on every deal. After years of feeling owned by the bank and being stressed out, he learned how to buy properties using creative financing, including subject to lease options. After the market crashed in 2008, his banker cut him off. Jay had to abandon everything he knew about how to finance his deals, and then he heard about the world of private money. He developed his own system for gathering millions of dollars for real estate deals, and over several years, Jay refined his system until it was repeatable and dependable. When he put it to the test, the first person he approached gave him $250,000 in private money. In just a few short months, he raised $2,150,000 in private money. Despite initially cursing his banker, Jay now thanks him. His unique system allows him to enjoy seven-figure profits year after year, and he also has the freedom to work less than 10 hours per week in his real estate investing business by leveraging the power of automation. He's also the author of the book, Where to Get the Money Now. He's an extraordinary American, and I'm glad and honored to have him on the show. Jay, are you there?
I'm right here, Cosmos. Thank you so much for inviting me to come along and talk about my most favorite topic that I'm so passionate about, and that's private money. The reason I'm so excited about private money is because this number one strategy has caused me to never miss out on a real estate deal ever since 2009 when I started using private money. It's so powerful.
Jay, yes, we all want to know more about that. I'm so thankful that you came on this podcast to share your story and your knowledge. So, can you tell me, the audience, a little bit more about yourself and your background story and how you got into the world of real estate and private money?
Sure. Well, first of all, my wife, Carol Joy, and we live here in eastern North Carolina in a very, very small area. We're in Morehead City, North Carolina. We only invest in two counties. So our total target market that we really focus on is only 40,000 people. Now, we do 2 to 3 deals a month, but our average profits now are $86,000 per deal. Now, I don't share that to brag. I share that to make a point, and that is, there's an argument to be made to dominate a smaller tertiary market instead of trying to compete with all those other real estate investors in the bigger cities. Well, we started investing in single family houses in 2003, so quite a few years ago. And a lot of the houses we flipped, we've rehabbed and flipped over 500 single family houses since we started here in the area. And so here's what happened, Cosmos. From 2003 until January of 2009, the only thing I knew to do to get my deals funded was to either go to the local bank or go to a mortgage company and apply for loans and provide financial statements. And they pulled my credit score and all that. And they always had to get an appraisal and et cetera. Well, that worked out okay, so to speak, from 2003 to January 2009. But Cosmos, then in January 2009, everything changed. Everything changed. I called up my banker in January 2009, and his name was Steve. I had two houses under contract to purchase. And Cosmos, I thought I still had a line of credit at the bank until I got on the phone with my banker, and I learned like that my line of credit had been closed with no notice to me whatsoever. Wow. And I said to my banker, I said, what in the world are you telling me? You're closing my line of credit. We've had a great relationship here for 6 years, and I've made my payments on time. I got a great credit score. Why are you closing my line of credit? And my banker said, Jay, don't you know there's a global financial crisis going on right now? And I said, no, but you just gave me a financial crisis. I don't have a way to fund these two houses or my deals. And my banker said, well, we're just not loaning money out to real estate investors. So I hung up the phone. And Cosmos, this is where everything changed, the trajectory of my company and investing in real estate. I sat here at my desk and I thought for a moment, and I asked myself a very important question. And you know, the power is in asking the right questions, because with the right questions, you get the right answers. And the question I asked myself was, I said, Jay, who do you know? It's not how, it's who. Who do you know that can help you fix your problem? And immediately, I thought of a good friend, Jeff Blankenship. He was living in Greensboro, North Carolina at the time, and he was investing in single family houses. So I called up Jeff and I told him what had just happened about getting cut off at the bank. And Jeff said, well, Jay, welcome to the club. And I thought to myself, I'm not sure I want to be a member of that club. But I said, Jeff, what club are you talking about? He says, well, that's the club of having the bank shut you down. He said, my banker shut me down last week. I said, well, Jeff, how are you going to get your single family house deals funded? He said, well, have you ever heard of private money? I said, no. He says, have you ever heard of self-directed IRAs and how people can use retirement funds and be a passive real estate investor and loan money out to us, real estate investors, from their retirement funds, and then the interest we pay them would be either tax deferred or tax free, depending on the type of retirement account they've got. I said, Jeff, I don't have a clue what in the world you're talking about. I said, what is private money? He said, well, I'm not exactly sure. He says, but there's a gentleman down in Jacksonville, Florida, by the name of Ron LeGrand. And he said, Ron says he can teach us about private money. I said, well, what is it? Jeff says, I don't know, but Ron says we can get a lot of it really, really fast. So Jeff and I went to that conference all the way back in February of 2009. And boy, Cosmos, I learned all about private money. And we're not talking hard money. We're not talking institutional money. When we say private money, we're talking about doing business with individuals, ordinary people that use either their investment capital and or their retirement funds to fund us real estate investors deals. And so I was able to raise $2,150,000 from just ordinary people that had never heard of private money. They'd never heard of self-directed IRAs. You know what's interesting, Cosmos? I never asked anybody for money, and I still don't ask anybody for money. And how do I do that? I do this. I put on my teacher hat, which says private money teacher. So I just went about teaching people in my own network that I go to church with. They're in the Rotary Club. They're in my cell phone. And, you know, we got 47 private lenders, and not one of them ever heard about private money or self-directed IRAs until I taught them about it and exposed this opportunity to them. So as a result, I never asked for money. I lead with education, and then the money's chasing me instead of me chasing the money.
Wow, Jay, there's so much to like ask over here, like especially like because like the 2008 financial crisis was such a traumatic time for millions and millions of people, especially in real estate. But you somehow rebounded, and so what I wanted to ask for the sake of the audience is how like most people when they think of like mortgages, they think of like the bank, right? They cannot, well, I'm gonna get a loan from the bank, I'm gonna have the mortgage, and then I'm gonna pay it off for a period of time. So from your perspective, how do you go about finding private money to basically like get real estate deals and fund your mortgage?
Yeah, great question, Cosmos. There's three categories of where private lenders are. The first category is what I call ordinary people that are in your own network. You go to church with them, you play golf with them, you go to the Rotary Club, they're co-workers, ordinary people. Who do you see every week? Where do you go every week? So that's the first category, your own network of people that don't know about private money. They don't know about self-directed IRAs. All right, that's the first category. The second category is what I call your expanded warm market or your expanded network. In other words, if you want to scale your business and really grow your business, then you're going to run out of your own connections sooner or later. So how do you grow your network, right?
Mhm.
And I'll tell you one way to grow your network very, very quickly is get involved in the local BNI, which stands for Business Networking International. So if you're listening to this show and you're an entrepreneur or you want to be an entrepreneur, and even if you're not interested in real estate, join your local Business Networking International. It's a fantastic group. You'll grow your network very, very quickly. And that organization and each chapter is together for the purpose of giving each other leads to do business. The third category of where you find private money are existing private lenders.
Mhm.
Existing private lenders. These are individuals, ordinary people just like you and me, that are already loaning money out to real estate investors, either from their investment capital and or their retirement funds. So the question is, where in the world do you find those people? Well,
Mhm.
I'll tell you, there's a number of places to find them, but I'll tell you one place is really, really easy. And that is, did you know that over 70% of account holders that have a self-directed IRA account want to loan you money on your real estate deals? They want to be a passive real estate investor by being a private lender and fund your deals. But here's the interesting thing. That's not going to be an educational conversation. You're not going to be teaching them about private money. They already know about private money. So now that's going to be a negotiation conversation because they're already a private lender. They're already loaning money out. And you know what, Cosmos? I'd rather be an educator than a negotiator.
Mhm.
Because you see, when I'm educating, I make the rules. You see, that's what's so different about this world of private money. The traditional way to borrow money for anything is you think whoever's lending the money is the underwriter.
Mhm.
That's the traditional way of thinking. And whereas the traditional way of thinking is whoever's got the money to loan out makes the rules, sets the terms, sets the interest rate, sets the length of the note, sets the frequency of payments. But I turned that upside down. In this world, we make the rules. You see, instead of traditionally asking or applying for a mortgage, we're offering a mortgage and an opportunity primarily to people that have never heard of this world. So therefore, we make the rules. We're offering the opportunity. You know, here's what's interesting, Cosmos. I've been paying my private lenders the same interest rate, 8%, all the way since 2009. And then the market's gone up, the market's gone down. People ask me all the time, they say, Jay, how in the world have you been paying your private lenders the same exact interest rate through all these years? And they love it. Well, there's two reasons. Number one, 8% ever since 2009 has been a whole lot more money than you can get at the local bank, even in a certificate of deposit. And the second reason I've been paying them 8% all these years is because I make the rules. Remember, we're
Mhm.
the borrower. We're offering an opportunity. We're not asking. We're not applying. We're offering the opportunity.
So Jay, this is like a big shift, right? Like for a lot of people, like when they think of like making real estate deals, they think of like the traditional way versus using private money. So, like from your perspective, what are the limiting beliefs that the audience that is watching, like, what are the limiting beliefs you think that most people have when it comes to real estate and private money that they need to get rid of in order to succeed in this line of work?
Well, the very first limiting belief is what I just said. They think they have to cower and succumb to the lender's underwriting and terms. So, as you just said, this is a huge shift, right? So, people ask me all the time, how do you get started raising private money? And I tell you how you get started raising private money. You got to own the real estate between your ears first. You got to have the right mindset. And that part of this mindset is no begging, no chasing, no selling, no persuading. You're educating and you're offering the opportunity. So that's the first mindset shift. Another very, very limiting belief. Oh, my lands. This is one of the biggest limiting beliefs. I'm so glad you asked, Cosmos. A lot of real estate investors who are looking to raise private money, they think you got to pitch deals. They think you have to pitch a deal to your private lender. You know what, Cosmos? I've never pitched a deal in all these years, and I get every one of my deals funded. So what I'd like to share with you, Cosmos, and your audience, I want to share the exact script, the exact words that I say over the telephone to one of my private lenders when I have a deal ready for them to fund, and I get it funded 100% of the time, every time, without pitching the deal and without asking for money. So here's how it works, Cosmos. Let's do the setup. Let's do a couple of hypothetical assumptions, all right?
Mm-hmm.
Cosmos, let's say that you're one of my private lenders, okay? And here's how you became one of my private lenders in this example. Let's say that you and I go to church together, and we know each other, and we've known each other for some time. So we like each other, we trust each other, we know each other, we see each other all the time. And let's also assume that I have taught you and I've exposed you to this world of private money and being a private lender, okay? And you like the interest rate, you like how you're protected, you like how you can get your money back in case of an emergency. And let's also assume that you worked with a previous employer, and let's assume you had $150,000 still in a 401k with the plan administrator of that previous employer, and you're not liking, and you've left the company, you've moved on, but it's still sitting over there, and it's in the stock market, and it's volatile, and you're not liking that. And you like the program, the opportunity that I've taught you, because you know when you invest your money, you know exactly what your rate of return is going to be, regardless as to what happens to my deal or the market or anything. So let's also assume I have introduced you to a self-directed IRA company that I recommend. And you've moved that $150,000 over to the self-directed IRA company with no tax effect, no tax consequences. You moved that money over because you wanted to invest with me. You wanted to be a private lender. And where we left it was I said, Cosmos, I will put your money to work for you just as soon as possible. So that's the setup. So now let's assume I got a house under contract, and now I'm ready for one of my private lenders to fund it. So I'm going to call you up, and here's exactly what I would say. I call this the good news phone call. This is what this is called, the good news phone call. And so I call you up, you answer the phone, we have a little chit chat. And then I say, here's exactly what I say. I say, Cosmos, I've got great news for you. I can now put your money to work. I've got a house under contract in Newport, North Carolina, with an after repaired value of $200,000. Now, the funding required for the deal matches up to what you've got in your self-directed IRA. It's $150,000, and closing is going to be next Friday. So I'll need for you to have your funds wired to my real estate attorney's trust account by next Thursday. I'm going to have my attorney email you the wiring instructions.
Mm-hmm.
That's the end of the conversation. I mean, it's like there's three big reasons that Cosmos is excited about funding my deal. Here's the first big reason. For goodness sakes, Cosmos trusted me to move his $150,000 over to the self-directed IRA company. He's already done that, right? You see, here's the secret sauce. I'm not teaching the opportunity and talking about a deal in the initial conversation, because here's a writer downer. Desperation has a smell to it. Desperation has a smell to it. The worst time in the world to be trying to raise private money is when you need it for a deal. Cosmos, I don't know if you've ever heard this, but how about them gurus that stand on stage and they'll say, "Oh, just get the deal under contract. The money will show up." You ever heard that?
Yeah.
That's the most stupid thing I ever heard in my life. Where's the money going to show up? Is it going to like rain out of clouds or something? Somebody's going to drop you a box of money on your front door after because you got a deal under contract? Or they'll say, "Oh, money finds good deals." You ever heard that?
Yeah.
Yeah, what's money got? Money got legs? Is money like running around, looking for good deals? That's the most stupid thing I ever heard in my life. So I say, get the money lined up first. There's always going to be deals, right? So back to the three reasons, Cosmos, why you are excited to fund my deal. Number one, you already moved your retirement money over to the self-directed IRA company. And I haven't talked to you about any deals yet, but I have told you I can put your money to work quickly. The second reason Cosmos is excited to fund my deal is because Cosmos knows I'm not going to bring a deal for him to fund unless it matches the criteria of the program I already taught him. Did you hear the numbers? I told him the after repaired value is $200,000. The funding requires $150,000. Well, that is 75% of the after repaired value. Cosmos knows I'm not going to borrow more than 75% of the after repaired value. I didn't say 75% of the purchase price, 75% of the after repaired value. So as a result, I'm always going to bring home a big check when I buy the property. I mean, who wants to get paid to buy properties? I take none of my own money to the closing table. And then the third reason that Cosmos is excited to fund my deal is because he's not making any money until I invest his money and put his money to work and he funds one of my deals. So unpack what just happened. I wasn't chasing somebody for money for some deal I got under contract, right? That's the worst time in the world to be looking for money. We educate, tell people how this deal works. They're excited about it. And then they tell us how much they've got to invest. And then we find a deal just as soon as possible for them to fund. We call them up with the good news phone call, and there your deal is funded.
Wow, this is amazing. Like it's almost like a system, like where like you can repeat this and you can like basically start getting the deals. But Jay, one question that I had was I know you mentioned that you used to have like the banker, right? And like, I'm asking for the sake of the audience because a lot of people rely on banks and everything. They believe that institutions have like a certain level of like trust and everything versus private money. So could you tell the audience what is the inherent differences you notice between bankers and banks lending you money versus private money lending you money?
Sure. And when we say banks, I'll also include hard money lenders because hard money is institutional and hard money lenders is not private money, right? A hard money lender is a broker of money that raises money for their fund and then they loan that money out to real estate investors. So there's 20 reasons why I love private money over institutional money. Don't worry, I'm not going to tell you all 20 reasons, but I am going to tell you the big ones. Number one is the interest rate that you pay, right? So I pay my private lenders 8%. Even a commercial lender at the bank now is more than 8%. A hard money lender is going to charge between 12 to 14 to 15%.
Yeah.
So the interest rate's a lot higher with institutional money. Private money is much lower. The second reason, there's no origination fees. No origination fees, no points when you're borrowing private money. You always pay origination fees and points with an institutional lender, so that saves you money. Another big reason, extension fees. So all the notes that we do borrowing money from private lenders are 2 years or 5 years. When you're borrowing money from an institutional lender, that's typically going to be either 6 months, 9 months, or 12 months. So with private money, there's no hurry to pay it back. Another big difference is what's the most that the lender will advance or loan to you at the point of purchase, right? So with private money, you get all your purchase price up front. If you're rehabbing a house, you get all that money up front. And here is a writer downer, a checkpoint. If you can't bring home a big check when you're using private money to buy a property and take none of your own money to the closing table, you paid too much for the house. Okay. Another big reason, there's no limit to the amount of private money you can have. When I was borrowing money from the banks, there was a limit to my line of credit. Another reason I love private money is that there's no limit to the number of private lenders you can have. Another big difference, Cosmos, is how fast you can close. How fast you can close the deal. I can close a single family house deal in 7 days. 7 days from the time of going under offer to purchase. No way is that going to happen with institutional money. So it really, private money puts you in the driver's seat to where you'll never miss out on a deal for not having the money.
So Jay, in your entire career, like doing real estate deals, what were some of the biggest revelations you had regarding just like the entire industry of like private money and real estate?
Well, one of the biggest revelations I had in the world of private money is the private lenders need us as much as we need them. The private lenders need us. I mean, they have a problem. They're looking for a better rate of return than they can get in the local bank. They're sick and tired of the volatility of the stock market. They want a reliable rate of return, and we provide that solution. And so, a big revelation, Cosmos, was is that I'm providing them a service, right? I'm providing them a service. Whereas the old way of thinking is the traditional banker is providing me a service. Well, with private money and real estate investors, it's a win-win scenario. Everybody's winning, right? Another big revelation is some real estate investors think, particularly if they're new, they say, who's going to loan me money on a real estate deal and I've never done a deal? Like, who's going to loan me money if I'm new? And here's the answer. If you don't pay the private lender, the property does. And what I mean by that is we never borrow unsecured money. We never borrow unsecured funds. We're going to give our private lender a mortgage. In North Carolina, it's a deed of trust. In Texas, it's a deed of trust. But it's that legal instrument that allows your lender to foreclose on you if you don't pay them. So the bottom line is, when you're the borrower, if you don't pay them, the property does.
Yeah. So Jay, I know that you've made like millions in like real estate deals, right? And like you've had so much success in this venture. A lot of people like they make one deal or they make two deals, but they're like afraid of financial risks when they're venturing out into this line. So from your perspective, how do you go about assessing and calculating risk, especially when it comes to money in this matter?
Two answers. Number one, never borrow personally guaranteed debt. So when you borrow institutional money, when you borrow from the bank, when you borrow from the mortgage lender, when you borrow from the hard money lender, you're having to personally guarantee that debt. Private money is not personally guaranteed debt. Now, the private lender is going to get a mortgage or a deed of trust to where they could get the house. But if everything goes upside down, you're not personally guaranteeing debt with all your other assets. All right. That's big. Number two, how do you mitigate risk? You got to buy right. And look, let me tell you something. You don't buy based off of what HGTV tells you to do, right?
Yeah.
So the money is made not in calculating the renovation cost exactly correct, because it's never exactly correct, right? You mitigate your risk by buying it at a discounted price. So never let your emotions come into play. to decide what's the most you're going to pay for a property, right? So you let the math make the decision. So I have a formula and I follow the formula strictly. The math makes the decision on your maximum offer when you're using private money and not your emotions. And you do not stray from that formula, and you let the math make the decision, not your emotions.
So, Jay, how would somebody know like a good deal from a bad deal, and like what is do you have like a way of knowing and trusting the other person when it comes to like making deals? Because like there's sometimes in real estate you meet shady characters, and like so, what would be your way of knowing whom to trust and whom not to trust?
Are you talking about what private lender to trust and what private lender not to trust?
Yes.
That's an excellent question. Do not attempt to borrow money from a private lender that you do not know. Never. Let me tell you an example. You've got scam artists on Facebook that are pretending and proposing to be private lenders. And they'll post on their social media that they're only charging 3%. Hey, if something sounds too good to be true, it normally is too good to be true, right? So they'll say, and we fund in 7 days. We only charge 3%. And here's where the scam comes.
Mhm.
They have a little short form application where you see in this world of private money, there's never any applications. Remember, we're teaching. We're not
Yeah.
applying for a mortgage. But they'll have like a little short form application and they'll be purporting themselves to be a private lender. And they'll come back to you right away and they say, you are approved. And they'll say, submit your deal to me. So you submit the deal and they say, your deal's approved. And then here's the scam. You got to send in up front the $3,000 processing fee before funding. There's the red flag. If a private lender that you did not know asks you to send any kind of money before going to the closing table, run the other way. Just don't borrow money from people you don't know.
Yeah, I mean, the reason I was asking is because a lot of people, like, their biggest fear is they are going to get scammed, Like, they want to get into real estate, but they just don't know whom to trust, whom not to trust, where to go to find a good deal, and also, like, with regards to lending money.
Correct. Yeah. Well, it all comes down to relationships and knowing who you're doing business with.
No, totally, Jay. And Jay, I know you wrote this book, Where to Get the Money Now. Can you tell me and the audience a little bit more about this book and the premise of what made you write it?
Absolutely. So, as you said, this is a bestseller. It's called Where to Get the Money Now. And the subtitle is How and Where to Get Money for Your Real Estate Deals Without Relying on Banks or any kind of institutional money or hard money lenders. And you know what? This even has in the book the exact opportunity that I teach new potential private lenders and how they can become a private lender. And Cosmos, I would love to express mail this book to your audience. It's $20 on Amazon, but I'd love to autograph it, express mail it to them, just covers shipping. And I'm also going to include 2 tickets to my private money conference valued at $3,000. I'm going to include those 2 tickets with the book. And your listeners can pick up the book. I'll ship it to them at jayconner.com/book. So I'm an ER, not an OR. So it's jayconner.com/book. And I'll rush it right out.
Thank you so much for that, Jay. I really appreciate that. And Jay, can you tell the audience a little bit more about the private money authority, and like a little bit more about that and what it does?
Well, the Private Money Authority is what people call me. So the Private
Okay.
Money Authority is not a company. I heard in the intro you said I'm the president of the Private Money Authority. Private Money Authority is just what people call me. That's my title. And so what do? I've been raising private money for my own deals since 2009. And in 2011, I started teaching other real estate investors how to get all the private money they'd ever want for their deals. And that's why I'm just so pleased to have this new book that I'm able to rush out to your audience. So I'm interested in giving back and making an impact with other real estate investors to never miss out on a deal and be in charge of making your own rules.
Thank you so much, Jay. Like that, this is like amazing, and like the impact that you're making is really good because a lot of people become financially free to real estate. And then there's a saying like a lot of millionaires are created in the real estate industry. And so
Absolutely.
yeah, and so Jay, just one more time for the audience, like how can they connect with you and get to know more about you and your work and everything you do? And if they want consultations, how they go about doing that?
Yeah, the best way is just pick up my book because all my contact information, my phone number, and everything is right there in the book. Just pick up the book at jayconner.com/book, and all my contact information will be included.
That is amazing, Jay. And Jay, I'm so glad that you took the time to come in this podcast and share your knowledge about private money and real estate because this seems like the surest short way that people can become millionaires in this industry and also become financially free if they do it the right way. And I do hope that you take the time to come back on the show at a later time.
Thank you so much, Cosmos. I love being here, and thank you so much for having me.
No, thank you for being here as well, Jay. And I want to conclude this episode by letting my fellow extraordinary Americans know that, hey, look, there's an extraordinary within each and every one of us. It's our duty to awaken it and unleash it. Until next time, bye for now. Hey, everyone. Thank you for watching Extraordinary America. If you like what you see, please do subscribe to our podcast and share it with others. Remember that the best investment that you can make in your lifetime is in your own financial education, for it is knowledge that truly sets us free. Also, remember that inflation is diluting your purchasing power, which in turn increases financial bondage. The practical thing to do is to protect the loss of your purchasing power and invest in precious metals or the right cryptocurrencies. Lastly, never forget that you are an extraordinary American. We'll see you in the next episode. Bye for now.